Okay, let's see. Have my notes. Actually, I was looking. All right. Let's start this meeting. Gotta make sure I put my timer on for parking. Oh, hi. Yes. Yes, it's nice to meet you. Oh my gosh, it's great to put a face to the name. How's everyone? I know, right? I can't figure out what to wear these days. It's just like, do I wear a dress? Do I wear my shorts? Do I wear like a beret? I don't know. Oh, thank you. I know. It's my look. So I know everyone's time is precious, and I just want to come in and meet with you guys. I love the decoration of your place. It's like very like nurturing nature. And then so I just kind of like want to just introduce myself. Like I know we've been chatting on Zoom quite a while. I know quite a while is like a day, but I know that I just want to come and meet you in person because I'm a big like in person kind of person. So I just want to make sure that we are on the same page before we move forward, and just to give you a rundown of what to expect. Live presentation. Yeah. Okay, let's get started. So, one of the things I like to look at is what most business owners do on a daily basis, right? They do bank balance accounting. They look at their bank accounts. Okay, this is how much money I have in my bank, and not so much really tracking where the money is going. Yeah, they see money coming in, and then okay, we have X amount of dollars to do X, Y, Z, and we can pay this. But honestly, that's not really enough. So I'm going to look at see what accounts you have, and just to get an assessment of how your business is running, right? Do you have the proper accounts? More than one, right? It's plural. Do you have the proper accounts to make sure that you're you have that proper foundation? And so I want to make sure that you have your tax account, your operations expense account, your income account, and your owner's account, right? This is where you guys as the partners of the company, where your money goes, right? Your distributions from your clients, right? You want to make sure that you guys get paid as well. And we'll dive into when we start the implementation process of how you guys are paid, whether it's if you are categorized as W 2 employees or if you just take shareholder distributions. Just to make sure that those accounts are set up. And then I'll also like to assess where those transactions are going. Uh, are they going to credit cards? Are loans being taken out directly those accounts? What monies are being moved? XYZ. So I need to get a feel of what I'm working with. In addition to, I also need to look at the accounting software that you're using and see if those line items in your chart of accounts are actually set up correctly, because you may have credit cards coming out of the account, and it's somehow the rule that was set up a different category, which would not be obviously not ideal. You would make sure credit card is not labeled as insurance, unless you're paying with insurance, which makes sense. But loan that's taken out that's under travel, it's we have to make sure that those categories are properly aligned, right, in the system. Any client reimbursements, right? Client pays you for ordering a product or paying for a service on the behalf that you're working with another consultant or vendor, we're going to make sure that's also directly seen as a pass through and that's not income on your guys' sheets because you will be taxed on that. So like things like that has to be correctly allocated, looked at, scrutinized to make sure that we're finding you the absolute most savings in your revenue, right? Because we want to increase your net profits as much as possible. Also looking at your accounts payable and accounts receivable, which is my favorite part. I know. Tim knows. That's all we talk about. Like, that's like the best part. Some clients, it's like a touchy subject when they're dealing with getting, not getting, but receiving monies. They don't want to harass a client. They may have a client that's passed through 60 days. They may have clients that are passed through 365 days, right? Which is not a problem because I'm able to go ahead, look at the notes, review what needs to be provided to that client because they may be missing a key piece of information that you have, but everyone's trying to like finish a project or get things moving and finalized, and then the client may need something your end in order to satisfy what they need on their end. So a lot of times it's like a lack of communication. There may be changes on their end as far as their accounts payable section where an employee leaves and someone else takes over. They don't have access to that information, and so it's pretty simple just to like go through. Worst case scenario, we have to go ahead and go to arbitration, mediation, but we like to avoid getting to that step because that does cost money. So I like to do everything and collecting those funds, even that's again over a year. And then for like the easier ones, that's just like 30, 60 days, 90 days where a client they travel, right? They travel and they may not have access to email for a very long time and they just probably forgot. They have children. They are all over the place. They are not really organized on their end. And so sometimes those emails may get missed or your emails just going straight to spam. Maybe calling them, I don't know how far is that exactly what your collection process is. So we're going to review all of that and to make sure that your collection process is very sturdy. Like it's a flow, right? You don't want to just do here, there, here, there. You want to make sure that, okay, it's just that one, two, three, and it should be like a simple 3-step process. And if you have to add additional steps, guide you along the way to make sure, okay, if this doesn't work, then this is the next steps. And you want to have that relationship in a positive way with that client to make sure that they don't feel like they're being shaken down, right? Because no one likes those collection calls like this. Oh, you owe us money. No, I don't. Or you owe us money, can you kindly please pay us? There's like different ways of actually going about it, obtaining the funds that is owed to you. Yeah, exactly. After we do that, look at the AR, we go into the AP, look at those reports, right? And see the timing. So you look at to see, okay, are you well within the 30-day, nothing's past due, or is it like 90 to 120? So when we see those on reports for some companies, that's a clear indication that one, the money is not being managed properly. Yes, they're receiving a revenue that they should be getting, but where's the disconnect? Like where are the leaks within that? Yeah. Someone taking extra distributions, or they run up the credit card, take more money out of the account to go ahead and pay that credit card down. Because good debt, there's bad debt, but you also want to manage if you're going to go into the larger goals that you want to obtain, which is, expand the business. Do you want to do certain large ticket items that is beneficial to your company and to your employees? It's something that we talked about not too long ago, right? So you want to make sure that those are very manageable. right? So we look at that to see, okay, are you paying for something that's on the credit card that you don't really see, that you don't need to be paying for, like subscriptions and other types of software that is not beneficial. You just have it sitting there and it's charging you per month, right? How can we recoup those funds so you can do the things that you want to do? We look at all of that just to restructure the company. So with your account bank set up, having that steady, looking at your income statements, working with your tax accountant so we're on the same page, and making sure that everything that's allocated correctly in those categories within your accounting software. Excuse me. And once we do that, we'll provide you with a clear roadmap for the first 12 weeks, which is a goal, right? And then as we're approaching the 12 weeks going to the phase two, what the ones that we find, right? We're going to put that into phase two. What is the tangible low hanging fruit items we can do, right? So the other problem that we discuss is your lack of employee engagement. A lot of your employees are talking to one another and saying that sure needs to be changed, that we wish that we could have more activities, and they are literally doing a lot of removes to other companies in the same industry that offer those perks and benefits. Like, yes, they get you looking for that engagement with their colleagues, right? It's like, what is the reason why do we have to come to work? I can just stay home because you guys do offer flexibility in their schedule. But what are the reasons why should I come to work and versus why I can just stay home and get my work done? Like, why should I? So we want to make it a fun place because we want to not only say, okay, yes, we are going to increase the hours in the office, but at the same time, we're going to be productive, have fun. And when I say have fun, that's mean, pop bottles and, have charcuterie boards all over the place. Like, it's mainly like a sense of worth, of a feeling of belonging. So this is what we want to do. We offer these like additional perks. Going to golfing, we can do tennis, we can do axe throwing, we can do theater, we can do museums, and all types of different things. And that's just like the easy stuff. But if you want to go, depend on your budget and how much you want to allocate, we can even do like wine tasting, for the whole day, do like different tours. So depending on where we can find those savings for you, that we can allocate and have like tiers of, okay, this is what we can do this month, or we can do this every quarter, so it's more manageable. And also you can take those savings, redistribute them into other accounts. So you have, distribution for your backup accounts, just in case. You can allocate that more to your tax payments. Sometimes you may have, shortfalls within that quarter or for that year, and you don't want to have to dig into another account in order for you to rob Peter to pay Paul. That's not what we want to do, right? We want to be scrounging around for money. So you want to make it sure it's clear cut in the beginning that all your accounts that you have allocated, that's designated for its purpose, that this is for this is for this is for this, that's for that, and none of it's being touched. When it comes into this account, is being transferred to this account, this account, and that's the only purpose for. No dipping into and transferring here and there, because it's going to be very messy. And we also want to make it easier, not just for yourselves, but also for your bookkeeper and your accountant. Because at the end of tax season, they were like, what the heck is going on here? Explain this to me. And then your guys are all scrounging around, everyone's stressed out when tax season comes along. And I've been in those positions myself where it's like, oh, what happened there? So you want to make sure the process is easy on a daily basis throughout the year. So, okay, everything's set up, all the numbers are in this category, and there's no confusion. And especially, there's no confusion on, the tax man, right? They're not going to come after you. Oh, we have questions. Once you get that notice in the mail, we have questions, hope and pray they don't send you that letter. That's all I'm saying. You want to do it, make sure you do it clean, no questions asked. You do it the right way, and you pay your taxes and you pay Paul and Peter. No one's robbing from each other, and you wouldn't have a problem. Yeah.